Nebius stock is on an absolute tear right now, and investors everywhere are asking the same question. Is this just the beginning, or is a major pullback right around the corner? Because what's happening with Nebius Group, ticker NBIS, is getting hard to ignore. The stock has been exploding higher, momentum is building fast, analysts are turning bullish, and suddenly the idea of NBIS hitting $200 no longer sounds crazy. But before you go all in, there's something important you need to understand. Some investors believe Nebius is becoming one of the biggest winners of the AI revolution, while others think the stock is moving way too fast and could be setting up for a painful correction. So, in today's video, we're breaking down everything: the bull case, the bear case, the real numbers, and what could happen next. Let's start with why Nebius stock is suddenly everywhere. This company has quietly transformed itself into an AI infrastructure powerhouse. And if you've been paying attention to the AI boom, you already know that infrastructure is where the real money is being made. Everyone talks about companies like OpenAI, Anthropic, and big AI chatbots, but behind the scenes, someone has to provide the massive computing power needed to train and run these systems. That's where Nebius comes in. Nebius is building high-performance AI cloud infrastructure, GPU clusters, and data centers designed specifically for artificial intelligence workloads. In simple terms, they are selling the picks and shovels of the AI gold rush. And right now, demand is exploding. Reports suggest that Nebius has been strengthening relationships with some of the biggest names in tech. Companies connected to the AI ecosystem, including giants like Meta and Microsoft, continue investing billions into AI expansion. At the same time, AI native companies are growing at lightning speed and desperately need more compute power. Think about companies like Anthropic. Their growth has been massive, but one of their biggest problems is capacity. They need infrastructure, they need GPUs, and they need data center power fast. That creates a huge opportunity for companies positioned correctly in this space. Now, here's where investors start getting excited. The argument for Nebius hitting $200 is actually based on something pretty simple: future growth expectations. When investors look at Nebius today, they are not valuing the company based on where it is right now. They are valuing it based on where it could be in the next 1 to 3 years. And that's important, because in high-growth sectors like AI, stocks often move ahead of fundamentals. Investors price in future revenue before it actually shows up in earnings reports. We've already seen this happen with several AI companies. Once Wall Street believes a company could dominate a major trend, valuations can expand incredibly fast. And that's exactly what some people think is happening with NBIS. Another reason for the excitement comes from the company's past execution. Nebius has already surprised investors before by outperforming expectations. Some investors believe management is intentionally conservative with forecasts, meaning they could potentially beat estimates again. And if that happens while AI demand keeps accelerating, suddenly a $200 stock price doesn't seem impossible.